Global equity markets have risen 70% in the last 5 years, 18% in the last year, and in this last quarter, ending in September, they rose another 5%. Now, when we have an global equity market bull run like this, many market commentators and many people begin to worry about markets being overvalued, and therefore whether or not we would suffer a market correction. Now, nobody can really predict whether that will happen, even though some people get paid quite a lot of money for trying. We are sure that it's not possible to do. So our thinking is that you can't predict, but you can prepare. How we prepare is by realizing that very expensive businesses have much further to fall in a correction. So in the Global Best Ideas Fund, for example, we know that the tried and tested value method has worked, and therefore we always buy businesses that are undervalued and therefore won't really fall that far in the correction. And we've used this approach in the two largest sectors of the Global Best Ideas Fund, and those two are the two largest exposures of the fund, and those two are the financial and the IT sectors. The biggest sector exposure in the Global Best Ideas Fund is our exposure to financials. And the financial stocks that we have picked have boosted the fund's returns very nicely over the last year or so. Our bottom-up stock picking has been rewarded in the financial sector, where sentiment remains poor. The sector, as everyone knows, bore the brunt of the fallout of the financial crisis almost 10 years ago now. But in the meantime, balance sheets have been substantially repaired, and we don't think that repair is properly reflected in today's share prices. We're also lucky that in a specialist sector, we are able to work closely with Koki Koeman's team, who have vast experience in the financial sector. In the Global Best Ideas exposure to information technology stocks, we've taken a dual approach by choosing both old and dismissed IT companies and disruptors, and I'll talk about both of those quickly. In the old space, there are businesses that have been neglected because they're perceived to have been left behind in the new tech era, but they have managed to reinvent themselves very, very substantially. And here we're talking about fund holdings like Microsoft and Oracle, and even old technology companies like HP and networking businesses like Cisco. Those have done quite well for us already, and we still think they are very undervalued given that they are not fully through their reinvention cycles. Secondly, we've also looked closely at the disruptors, if you like, the new companies that everyone is excited about, and have been able to find companies that might look expensive at first glance, but when you go and interrogate the growth that is in them, we think that that's not reflected in prices either. And here we're talking about businesses like ASML, which owns technology for making smaller and smaller chips and are quite unique on the planet in that respect, and a business with vast growth potential like Alibaba, both of which we've recently added to the fund.